Good afternoon. Welcome. I'm Keller, Head of Economics Research at Barclays, and I welcome you to our joint Barclays-CEPR Monetary Policy Forum. I'm very excited about today. We have, I think, a fantastic lineup of speakers, and we have a great audience, many familiar faces. I think anyone who is in finance in London should be here today. And let me start simply by asking, or by extending a warm welcome to our speakers. We have them coming here today, and they take their time, and they in the spirit of having an open dialogue with the financial community. I think that's much appreciated. We have the President of the Federal Reserve Bank of Cleveland, Beth Hammack. We have ECB Executive Board Member and Chief Economist Philip Lane, and we have Deputy Governor of the Bank of England, Dave Ramsden, and of course the President of the CEPR, Beatrice Di Mauro, who will later take over. Before we do this, let me also thank my fellow Barclays economists. I cannot list them all, but in particular, we have Silvia Dagna, Chief of European Research, really a driving force behind this event, Mark Giannoni as well. And I think today I also want to mention Brad Rogoff, our Head of Global Research, is here, and Rajay Daksh, both from New York, so it's becoming really a global event for the community with all the CEPR researchers and you in the room. I think it's a great event that we are having, and hopefully it's going to become a tradition. Now, with that, before I pass over, let me make maybe a few observations, and let me also kind of try to relate them to maybe what will be discussed today. When we prepared for this, we went through the past 4 meetings. This is the 4th meeting we had. We started in 2020. And there are 2 things really that struck me when I went through the various monetary policy forums that we had. And the one is how dramatically the nature of the shocks and the policy responses have changed just within a few years. And second, the immense role of unexpected events that were playing a very big, important role in this. And let me start with a dramatic change in monetary policy, or the monetary policy challenges. And let me remind you, somewhere I think even there in 2020, when we had the first forum, Isabel Schnabel spoke, and the title of her speech, just to repeat it, I think you wouldn't hear it today anymore, but how long is a medium-term monetary policy in a low inflation environment? So it was all still about not meeting the inflation target for several years, and the speech was all about the nature of the shocks, not allowing inflation to come back to 2%, and the ECB therefore had to be patient. I think it's fair to say that the Fed was in a similar space. In August 2020, they announced the famous FATE, flexible average inflation targeting. They haven't been saying much about the strategy review process, but somehow I believe FATE may not survive the next review. But just those, how different the times were. And we all know what happened afterwards. I mean, COVID struck. We had a massive further easing of policies, and we had the fiscal stimulus. We had the Russian war, the energy crisis, the supply shocks, and all that in a way led to the surge in inflation. And then, of course, we thought it was transitory. It wasn't. Central banks waited a bit, but then they very determinedly hiked rates very, very rapidly. And they started QT. So, I'm not going to go through the entire history here, but I think what is just breathtaking is within just 3-4 years, we went from below target inflation, lower for longer, QE, suddenly to high inflation, higher for longer, and QT. And that is something I think that is that's quite remarkable, even if we don't think about it anymore, because it just basically was recent history. Now, this year, everything looked actually quite well for normalization. We had inflation rates coming back towards targets. We had the policy rates either already in some cases at neutral or moving towards neutral. So it looked, as we see, a very successful normalization process. QT actually was running in the background quite smoothly. And then obviously we had another shock, and that's the new US policy with regard to tariffs and trade. We now have a situation whereby, there's a risk of a fragmentation of not only global trade, but possibly even global finance. That has raised some questions about the dollar as a dominant global reserve currency. The ECB already raised, I think, the stakes by saying, this is the moment for the euro to play a bigger role. That's certainly something that is new. And this brings me to the second point. We had these dramatic challenges, but each time there seemed to be some kind of an unforeseen event. And the role of events, I already said it, was in the beginning was COVID. I think, any policymaker who in February 2020 had given the first speech here would not have been able to anticipate what, global shutdown meant. I mean, it took place in Barclays headquarters, and I think 2 days later, entire Europe, or almost entire Europe, was in lockdown. It was impossible to anticipate what that would mean. And, hopefully there was a once-in-a-century event, but it's, some people are more pessimistic when it comes to these kind of pandemic events. Now, that was one. We had other, interesting fiscal policy events, and I think Deputy Governor Ramsden mentioned it earlier when we spoke. Our second monetary policy forum happened in September 22. Some of you will remember it was in the middle of the UK mini-budget crisis. And, I think this event showed that, with reckless fiscal policy, even a G7 economy can be brought at the brink of a financial crisis. There was intervention afterwards very successfully, and, it all went back. But fact is, maybe that could be something that comes up here if we look at the fiscal developments in the US, and also, the episode when we saw the very, very sharp rise in 30-year yields in Japan, but across core economies. So again, events, fiscal policy related. Then last year, we had the Monetary Policy Forum in May. We thought it was all smooth sailing. Another event. Who remembers the Prime Minister at the time, Rishi Sunak, decided to call a surprise early election for July. Our implication was that Catherine Mann, according to the UK election rules, suddenly had to withdraw from the event last minute. That was for us. For the UK, it meant a new election. But she was not the only, or he was not the only one. We had President Macron calling early elections in June, with a lot of worries what that could mean for potentially for Europe, depending who would win them. And then we had the beacon of stability, Germany, suddenly a very unexpected collapse of a coalition and early election. And that election, in turn, brought us a dramatically different fiscal path for the future from Germany, which probably is also something the ECB, again, has to take into consideration if it thinks about where rates will go in the coming years. The US election admittedly went as scheduled, and I don't think the election outcome was necessarily a surprise. But if anyone in the room here tells me that they were fully anticipating the breadth and the depth of the policy change and the implications it would have for the global economy, I'm happy to meet them later. I think most of the people didn't anticipate this. So another political event in a way that was very consequential. And last but not least, we have geopolitical events. And I already mentioned, what made the dealing with the COVID crisis a lot worse was obviously Russia's attack on Ukraine. That completely changed, in particular, Europe's energy situation. And, the terms of trade changed, and even today, Europe is still struggling with what happened then, even though they dealt with some of the short-term consequences. Over the weekend, I don't need to tell you, probably the headlines right now, whoever looks at their Bloomberg about the Middle East. Dramatic situation, suddenly overnight it looked de-escalated, but, it could have enormous consequences potentially for the region, for global energy markets, and therefore also for the global economic outlook. So again, central banks, may be forced to reconsider their policies if that was to materialize. To conclude, let me make a reference to the British Prime Minister, Harold Macmillan. I think when he once was asked, what keeps you up at night, what's your most troublesome problems? He said, events, my dear boy, events. And somehow I have the feeling that some of the central bankers here start feeling the same way. And with that, thank you. I hand over to Beatrice.